I'm Bryce Norris, Senior Editor of Farm Futures Magazine. Welcome to The Buzz for Thursday, July 11th, 2013. Market analyst Paul Bergner joins me to discuss grain futures that, for once, mostly ignored today's USDA report, at least for corn and soybeans. Instead, markets headed into the end of the week trading the way they began, focused on weather forecasts that, depending on how you looked at them, were either getting better or worse. Weather models appeared in agreement that searing temperatures over the southwest plains should continue for most of the next 2 weeks. The big question is how much of that heat will drift east, and if it does, whether the blast furnace could last until the end of the month, when much of the corn crop will pollinate. Conditions will be dry over much of the Corn Belt for the next week, but temperatures in the central and eastern Midwest should be mild. Both major weather models agree that will change late next week when Iowa temperatures move into the 90s. The American model doesn't see the heat lasting, though it may return the following weekend. And both models show this week's drying trend continuing. Paul, you're in the middle of the dome of doom out there in the western Nebraska, but isn't it always hot out there in July? Is there anything in the forecast you're seeing to make 2013 different?
You know, you just hit exactly on it. It's always hot here in July. It tends to be hot and dry, gets us through wheat harvest pretty cleanly, and that's the way it works here in the plains. It is a dry heat, though, whatever that means. Now, we're really not expecting it to get a lot more hot and dry. What we're really concerned with here is where's it going to go if it goes east? Are we going to stop partially away through Nebraska, or are we going to go all the way into Iowa and Illinois? That, I think, is going to be the big question in terms of where this heat goes.
Weather notwithstanding, USDA did put out a report today. For corn, the agency cut its estimate of old crop stocks by 40 million bushels, believing the late new crop harvest means more old crop corn will be fed. But the agency kept to its forecast for burdensome 2013 carryout, though its forecast for production fell slightly due to the small drop in harvested acreage reported June 28th. USDA also lowered its forecast for feed usage and exports by 50 million bushels apiece, which actually sent ending stocks 10 million bushels higher to just under 2 billion. July corn rallied above $7 for its best showing since February as it prepared to go off the board Friday. December corn is 35 cents off last week's lows, but still lags well behind the revenue protection base price of $5.65. For now, at least, crop ratings suggest good yield potential. Where do you think farmers should be considering making additional sales, Paul?
Well, we might be getting into that range right now where some more sales might make some sense. I've been saying in my daily commentary, 5.25 is a place to at least start looking at that. I think part of it's going to depend on how much we've already got sold. For those guys closer to 50% sold, maybe it's not a good time. If we're a little bit short on what we've got sold, we should start to look at that. And I think maybe the early next week, when we see what that weather does to us, might give us an idea of whether or not to go ahead and make some sales in this range, 5.25 to 5.5.
Well, July soybeans also went on a wild ride this week, making a series of new contract highs before pulling back. Old crop basis retreated on slower exports, and USDA made no change to its forecast for September 1st stocks of 125 million bushels. November futures rallied above the $12.87 revenue protection base price, despite decent crop ratings and continued bearish forecasts from USDA. The government raised its forecast of production by 30 million bushels due to stronger harvested acreage and kept new crop demand unchanged, increasing carryout to an unfriendly 295 million bushels. Paul, it's a long time until the bean crop will be made. We've recommended pricing 30% of new crop production. Is there a need to do any more now?
I'm starting to think that another 5 to 10% might be prudent next week if we get up here and challenge this $13 mark. It's that hot weather moving to the east, out of the plains, might actually bump this market up and over that $13 number. I'm willing to hold on for a little bit and see where that goes. As you said, there's an awful lot of time yet to make a bean crop or to cause some problems with it. But that $13 number is definitely starting to become attractive there.
Wheat looked like it might be the big winner from today's reports, though gains mostly fizzled by the close. While USDA increased its forecast of 2013 production due to a surprise that added 34 million bushels to winter wheat output, the agency slashed its forecast of ending stocks by 83 million bushels, thanks in part to stronger demand. USDA said China would import 185 million more bushels of wheat than previous estimates suggested, a notion borne out by big purchases recently of soft red winter wheat. Still, the agency bumped up its average price outlook by only 20 cents to $7.20 a bushel. Wheat stocks are tightening around the world, but not enough to produce major rallies unless corn and soybean prices take off too. Growers in Kansas no longer have any revenue protection coverage, and that insurance ends elsewhere soon for winter wheat growers. Paul, basis is firm for winter wheat. How long should growers plan to hang on to that grain, and what's the upside and downside?
Well, you did mention that basis is strong. In fact, it's surprisingly strong considering that we're in harvest and harvest is happening in my neighborhood. We're at a dime under. So there's definitely an opportunity. We might be looking at moving some of that grain, especially some that's in commercial storage. I'm not really excited about paying storage if I can move that at a $7 cash price here in the next few weeks as it comes off the combine. Something to think about there is where is this crop going to go? A big corn crop could really pressure us on the downside. Again, poor weather for that corn crop could give you some upside potential, but $7 wheat and not having to pay any storage on the stuff that's in commercial storage sure looks like an enticing opportunity to me.
Well, thanks, Paul. We'll be back next week with a closer look at forecasts for the key corn pollination window on the next edition of The Buzz.
We'll have to have more margin now, there isn't any doubt. So you better dash with a load of